Well, good afternoon, everyone. My name is Annabelle Pacheco, and I am an investor. I'm a real estate broker. I've been in business for 24 years and part of a global real estate company called EXP Realty. And I do this weekly call. Really, my goal is to share with you every week the steps that I took to purchase my first multifamily deal. Bring guest speakers onto this call that can share about multifamily, just the multifamily space, and so that we can all expand our knowledge and really so that we feel equipped enough to go out there and do this really on your own and do it for yourself. This call really is encouraged for everyone to participate, ask questions. Feel free to put those on the chat and we'll get to them and really just use this platform so that you can share information with each other and learn from each other. I am not selling anything. I'm not offering anything, and I'm definitely not a financial advisor. I'm just sharing my story with everyone. So a little about myself. I started my career in the mortgage industry in the mid-90s. I've purchased over 100 properties throughout my career, done a lot of rehab and flip, and in 2001 deviated a bit from real estate and built a restaurant from ground up, about 150 capacity. And we had full staff, 15 people working there. We had managers, chefs, and servers. And then really the last 10 years of my career, I've focused 100% on just representing clients in the residential and the commercial real estate just world. Residential, it's just something that naturally gravitates to because it's really my day-to-day business. Commercial has been from my own personal experiences, being in the trenches and walking in that field and purchasing commercial property and really just learning it from my own personal experiences. And I have definitely represented clients in the commercial world as well. In 2015, I purchased my first multifamily property, which was 34 doors, and we were in Texas. I currently live in California. We purchased out of state because it just made financial sense for us to do it out of state. And the reason we were doing this, or we thought of doing this, was because we were really looking for a way to create cash flow. And I think most importantly is generational wealth. So, we all think, and I'm sure everybody can attest to this, but right, like, how do we make our money work for us? And here are the reasons why I invested in multifamily, and I really do hope that it inspires you to do the same. It's not easy, and nothing is easy. But I can tell you that when you put your mind to it and you have that goal that you want to work towards, it can be done, So here are some of the reasons. Number one, we were looking for cash flow, right? Like, what can we invest our money in that can generate cash flow on a monthly basis? And just in a nutshell, cash flow is your rental income minus all of your expenses. Number two, it was the loan pay down. Like, how cool that here I'm buying in a property that the tenants with that rent will allow us to pay down the mortgage. There's nothing else that you can find out there that can give you this. Number three was appreciation, right? You are banking on that this property will appreciate over the long run. And you're not banking on it just because you're banking on it. It's because you're also working. If you understand multifamily, you're working on creating that appreciation on this property. And number four is the tax benefits. There's many other tax benefits, but two that stuck out for me personally was depreciation, which allowed me to expense a portion of the physical structure each year. And 1031 exchange, which is a great way that allows you to really defer the capital gain taxes by purchasing another investment property. And there's no limit. I mean, you can do this 2, 3, 4 times. It's finding the deals out there that you've got to come across. So I'm going to give you a quick example of the property that I purchased and just kind of give you some numbers so that you can see what a value add property can do if it's done properly, if it's done right. So value add means it's buying kind of the worst property in the best neighborhood. It's increasing its net operating income. And then as a result of that, the value of the property increases. So perfect example, purchased 34 doors for $850,000. Put down $350 as a down payment for the seller to carry the note for 2 years on the remaining balance of the $500,000. Now, it would have been tough for me at that time to go out and get a loan because the property was definitely not performing. So this was an easy way. I mean, the fact that the seller agreed was an easy way for us to become owners of these units, and it just facilitated things much quicker. We went in. I mean, obviously you're going to do your due diligence, you're going to do whatever it is that you have to do when purchasing whether it's residential, commercial, multifamily, there's a due diligence that everyone has to do. Well, doing all of that, once, we went in there, we remodeled. I mean, our goal was, okay, we need to remodel, we need to update these units so that we can increase the rents. And pretty much the necessary steps for us were to give notices to, we worked in groups of possibly anywhere between 5 and 7 doors at a time. And we just pretty much gave notices, and as they became vacant, started fixing these units. And it took us about, I want to say, 2 years for the property to be fully or at least over 50% of like updated and income producing. We refinanced and the property had appraised at $1.6 million. So we acquired a loan for $1 million. We're at a 65% LTV. We pretty much got all the money we had invested into the property, including our down payment and everything. And today's value of this property is $2.7, $2.8 million, give or take. So right here, you can see pretty much like a full cycle, right? You go in, you purchase, you remodel, increase its operating income, or net operating income. We were able to refinance, cash out. I mean, the ideal situation. Here are a couple examples of the property and what it looks like. 24 doors. There's a building that has 24 units, 1 bedroom, 1 bath. And then you have another building that has 10 units, 2 bedrooms, 1.5 bath, townhome style. So you can definitely get more for those. So let's take a look at analyzing, like, how are we going to analyze, right? And really an evaluation of multifamily property really is important before you actually just throw yourself into it. So net operating income is used to assess the initial value of the property and really to determine the building's ability to generate that income by looking at its current cash flow. So like I mentioned before, your revenue minus your operating expenses equals net operating income. Okay, so I'm going to give you some examples of what sources of revenue include, right? That would be rent, laundry machines, parking fees, vending machines, any other services that you can think of that would generate income into the property. And then you have your operating expenses, which include your property management fees, utilities, insurance, property taxes, repairs, and maintenance. So you're going to take all of that, you're going to add them all up, right? And then you're going to be able to determine what your cap rate is. And cap rate, it's important that you know that it's pretty much the property's capitalization rate. And it's really like, it's going to let you know the potential rate of return of the money that you've invested into this property, or that you'll need to invest into this property. So here's an example. I mean, if you expect that your annual net operating income to be $80,000 on a building that costs 1.6, you're going to divide that, very simple, and it's going to give you a 5% cap per year. That's the return on your money, right? So here's a list of revenues and expenses, and I want you guys to try to figure this out. What's the cap rate for the property valued at $2.5 million? So if you add up those sources of revenue, so here's just, I made up these numbers. You've got rent, $257,000 that you collect a year. You have laundry machines, you get $2,400. Parking fees, you get $3,400. Vending machine, you get $900, and other services, $3,000. Okay, so this is money coming into the property. And the operating expenses, so I put $24,000 for property management fees, $50,000 for utilities, $16,000 for insurance, $29,000 for property taxes, and $18,000 for repair and maintenance, right? So add them all up. and tell me what's the cap rate for this property valued at 2.5. So do the math, add it all up. Let me know when you're done. And then we'll go to the next page and we'll see who got the answer right. There it is. It's a 5% cap. So if you got 266,700 total for the income, and for expenses 137,000, then you did this right. And if you got a 5% cap, you took 129,700, which is the difference, right? And you divide that by the purchase price. There it is, 5%. So brokers and investors use the cap rate to calculate the investment's profitability, right? So you have to keep in mind that when you're looking at properties out there, you really want to make sure that that cap rate or that pro forma potential is there and it makes financial sense for you to invest in that deal. I mean, numbers are the first thing you want to look at. If there's room to improve and increase that income, then it's worth digging, right? And worth looking into this more. High cap rates mean that it's a lower listing price and a more profitable, it's more profitable, right? It's more profitable that the property will be. Now, multifamily properties with high caps can either be found in, maybe a rougher area or may need some significant remodeling. Lower caps tend to be located, in the city, in a good area, upscale residential area, and they're usually in a little better condition. Okay. Now, there's some classes of property that you also want to become familiar with, and there's C-class property, which sometimes has a higher cap rate in a good area, and kind of you could revamp it into a B, an asset like a B class. Maybe it's difficult, but you know what, it can definitely be brought up to a B class. And if you can find a C class property in a B class area, then you will do very well, because that income that you are going to be, you're going to be renovating this property, that income is going to definitely increase the value of the property. A C-class building with a lower cap rate are more likely to appreciate they'll appreciate in value over the time period. Okay. Now, factors such as loan amount, property types, occupancy, the age of the property, the location, the condition, economic conditions, and taxes play a significant role in determining the return on a multifamily property. So a good cap rate does not always guarantee a good investment prospect. I mean, you really have to look at the entire picture. So let's talk a little bit about due diligence, right? When investing in a property, I mean, you can never, ever, ever be too careful. So you definitely want to go through your due diligence process. Risks, violations, unpaid penalties, potential pending lawsuits, and just quickly can turn a profit into a loss. So you definitely want to make sure you're looking for all of these things. And you also want to make sure to inspect the building from top to bottom carefully for any potential structure anomalies, leakage, or even, just leakage, roof problems, just anything that could potentially be a big ticket item expense that you didn't even, plan for. You want to make sure you discover these things during that due diligence period. Analyze the location, right? Economic conditions and locations play a significant role in determining the value of the rental asset as well as the rate of return, right? There's different areas, different markets. If you're buying an apartment building, in a particular area, well, you definitely want to look, what are the other apartment buildings in that area going for, right? What do they look for? And you just want to make sure that all of this is being analyzed properly, so that when you purchase this property, that you're within those boundaries of, the max that you can really put into that property, so that you can get that return that you want. Make sure that you know the market in which you're actually buying. And if you don't know it, then connect with someone that can be maybe your eyes and ears and boots on the ground in that area with you. Partner up with someone if you have to, or just do enough research where you feel comfortable enough and confident enough that you know what you're buying. Do the research on the city that you choose to work in. You really want to understand its economy. You want to understand what's driving it. Okay, look at both, like, the positive and negatives, and assess if the cities that you're going to buy in are, like, ultimately going to increase your assets value over time and guarantee a strong cash flow. And that's why you want to look at your competition. What are other, multifamily or apartments doing in the area? What are the rents going for? What are the conditions of those apartments, as compared to the property that you might be interested in looking at? You've got to compare apples to apples. You got to look at everything. And multifamily supply and demand also plays a pivotal role on how you're going to build, right, this and make this perform. So the next step is, you've analyzed all this. Well, now you got to go see the property for yourself. If you decide that the property, that this is the one that you like, well, then you want to walk through, look, okay, let's go back for a second. You're looking at all the numbers make sense. We've now come to a point where, okay, now it's time. I definitely want to walk the property. I want to see the property. I want to feel it. I want to, everyone has a different way of doing things. And all I can tell you is I'm visual, and I gotta see it. I gotta feel it. And I gotta kind of have to be in it. And, examine everything from the grounds to the apartments, like the common areas, anything and everything. And it also pays to do, like, just open visits of similar assets. So go and visit other apartments that are, in the nearby area. Just go look at the units. You want to feel comfortable. You want to say, what I'm going to do, or what my plans to do at my apartment unit is going to be, this, and it's probably better than this. Then yes, I can increase the rents a little bit more. You got to go out and do that homework. And then really following these steps can help you develop a clear understanding of the property's worth. You definitely still want to talk to professional brokers out there, anywhere, professional brokers in that area, any lawyers or tax experts, if you decide that you are going to buy. And really, as an investor, apart from understanding the marketplace and analyzing recent sale comps and knowing how to identify and then properly evaluating a property, it's really imperative to know that the investments you're making that are wise and that they're aligned with your financial goal. Okay, so I'm going to keep this short. I am definitely